All right, hello there. My name is Ashley Micciche, and today's live stream is a bonus podcast episode. And I'm going to talk about the theme for this week, which is the 2021 economy and stock market outlook. Now, I want to I focused on a lot of different topics in each episode this week. I talked about the economic growth predictions for the year, stock market outlook for the year. I talked about some winners for 2021, some losers for 2021, at least how I see it. And then lastly, I talked about the housing and real estate outlook for 2020, which is kind of all over the map depending on where you are regionally, if you are trying to sell a house, maybe, or buy a house, or if you're investing in commercial properties or other types of investment properties. It's just all over the place. So today, though, I'm just going to focus on one potential loser for 2021 because I think it's maybe not necessarily in 2021, but looking out ahead into the future at some point, I think the other shoe's gonna fall with this, and I think there's signs of that already. So that's what I'm gonna focus on today. But before I do that, I just want to kind of take a look at the 30,000-foot view when it comes to both the economy and the stock market for 2021, and things are looking pretty darn rosy. We have a economy now. The economy projections are really, really interesting because it's probably going to take a while before we get back to where the economy was pre-pandemic. But when you look at the year-over-year growth rates, which is how these forecasts are usually, disseminated, it looks pretty good. So back at the end of December, President Trump signed the $900 billion stimulus bill. And as those checks start to get sent out and you have a new fresh round of loans for businesses as well, that's part of that. You have the Fed that continues to provide this backstop to the economy. All of these things send this clear message that at least in the first quarter of 2021, things are looking pretty good. In fact, after the stimulus bill was signed into law by President Trump, Goldman Sachs came out with their projection for first quarter GDP growth of 5%. We really have not seen that type of GDP growth since we came out of the global financial crisis back in 2008 or 2009. We've sort of had this steady but slow growth and certainly nothing in the 5% range. So you can see things are kind of just picking back up again and things look pretty darn good. And then you have this vaccine now that's starting to get rolled out, and it looks like maybe mid-year as we all get injected with this vaccine and things begin to return to normal. That should be very, very good for the economy, especially those hardest hit areas like travel, restaurants, brick and mortar retail. That all looks good. And then when you move on to the stock market itself, all of these things, that the economy moving in a positive direction is pretty much always good for the stock market as well. And it looks like, we're going to see some stronger corporate earnings if all of these things that I just mentioned, if all of that comes to fruition as expected. Strong corporate earnings, more capital spending on the part of businesses, more consumer spending as people go back to work. Now, as I talked about on the podcast, there have been some permanent job losses. And so there definitely will be some scars from this COVID recession. But you look at kind of the big picture and it does look pretty good. Likely to see also some stock buybacks and some increasing dividends. Yay, that's really, really good for those of you who are already retired or are planning to retire, because that means that these stocks that you own, if they're increasing their dividend, you're going to get an increase in your income as well. All of this is good news for stocks. So I have no idea whatsoever whether the stock market's going to grow at 2% or 10% or 20% next year. But all signs point to it being a good year for stocks, whatever that ends up being. Okay, so now let's move on to my cautionary tale for 2021. And I think that personally, that's going to be the big tech stocks. And this is a very unpopular opinion. You pretty much talk to anybody out there, and they will tell you that big tech, Apple, Amazon, Facebook, Google, um, Netflix. These are the FANG stocks, as they're commonly known, because of the acronym of their first, the letter of the first name. And if you've been invested in these stocks, you have had some pretty amazing returns over the last many, many years. I mean, every single year, pretty much, had you invested in any one of these stocks. Oh, I forgot Microsoft. That's in there too. So, um, but the problem is, here's a big problem, and it's really important that you understand this. These companies, the FANG stocks and Microsoft, are all of the top 5 companies in the S&P 500. So you have Apple, Microsoft, and I'm trying to go in order of largest here to smallest. So Apple, Microsoft, um, Facebook, no, Apple, Microsoft, Amazon, Facebook, and Google are the top 5 companies in the S&P 500. Now, whether you own a broad-based mutual fund, maybe a target date fund in your 401k portfolio, maybe you own the S&P 500 index, you think that you are diversified across hundreds of different companies, maybe thousands, and you are, but the S&P 500 and most of these mutual funds that you own in retirement accounts are market weight funds, which means that the largest companies make up the largest percentage of the index. So a perfect example of this is Apple. Apple is the largest company in the S&P 500. I just looked this up when I recorded this. It makes up about 7% of the overall S&P 500 index. Go all the way down to the 504th company in the index, which is Under Armour, and that makes up 0.009% of the S&P 500 index. So the largest share of the performance, the results that you see when you invest in this, is going to those companies that have the most weight. And that makes sense when you look at how the market performed this year, because all of the big tech companies, a lot of the big consumer discretionary brands like Amazon, those did fabulous in 2020. Um, but the problem is that they're all massive. So just the 5 largest companies that I mentioned in the S&P 500, those make up 22% of the weight of the index. And then you look at technology stocks as a group, that's 27% of the index. So whether you realize it or not, you probably have a significant portion of your retirement account just in a handful of big tech companies. Now, as I said, that's been a great place to be over the last few years, but I think that the winds are shifting when it comes to technology stocks, for a couple of reasons. One is that they just simply cannot sustain that level of growth that they've had for much longer. There are also some new risks with owning these stocks, primarily the potential for some messy litigation. There's some current antitrust lawsuits that are out there right now. And then all the time you hear more and more this kind of drumbeat about, these big tech companies and their censorship, and they have so much control over our lives and the information that we're fed on a daily basis. That is really, truly problematic. And just a couple of headlines. One recent Reuters headline reads, "Lawsuits pile up as U.S. tackles big tech's market dominance." That's about a new antitrust litigation. And then another recent headline from NPR, "Google lawsuit marks the end of Washington's love affair with big tech." So you have this antitrust litigation, you have this widespread abuses of censorship among a lot of these big tech companies. Messy litigation will hurt profits. And more importantly, I think it will damage investor confidence that these companies, that this technology sector in general is the place to be for investors. So that could mean price drops in the stock prices and losses for investors. And I think that it's just brewing enough right now that it could potentially become an issue for these big tech companies in 2021. All right, so that's it for today's live stream. And I'm right about my target, which is the 10-minute mark. But before you go, if you like this video and you want to hear more about what are some of those 2021 economic stock market trends to pay attention to, be sure to check out my podcast. It's the 1-minute retirement tip. I have links below in the description. Wherever you listen to podcasts, you can listen to my 1-minute retirement tip. But it is the only podcast on the Amazon Alexa platform that is bringing you daily tips to get you to retirement and through retirement, hopefully successfully. So if you have an Alexa device, you can subscribe to it on your flash briefing. If you don't have an Alexa device or you have no idea what a flash briefing is, then you can also listen to me on Apple Podcasts or wherever you listen to podcasts. Thank you so much for watching, and I hope you have a blessed day.